good evening, everybody. Make sure my mic on. Yes, my mic is on. Good evening. How y'all doing? How y'all doing? I'd like to welcome y'all to what is this we're doing? The price section recap for November 17th, 2022. Yeah. welcome, everybody. If this is your first time tuning in to Tim's Tidbit, I'd like to say welcome. If it's not your first time tuning in to Tim's Tidbit, I still want to say welcome and give you a hearty thank you for always pulling up with me and Spidey and for always trading what you see. You hear me? Go ahead, y'all. It's getting cold. Y'all pull up to the new TLR.com and get y'all some merch. Get you a trade what you see shirt. I mean hoodie. Get you a I'm not a bull or a bear, I'm a beast hoodie. Get you a I got options, I buy them, I sell them hoodie. Get you a what else we got? Discipline over dollars hoodie. Hey man, if y'all know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day talking about what the price action on, dealing with the S&P 500. Why? Because I want to. I want to help people get their aha moment when it comes to trading and investing, because people always be like, hey, I want to be a full-time trader too. So I show you what a full-time trader would do in any situation. Hopefully you get your aha moment. Hopefully you implement what you learn here, or what I share here, or what you glean from what I do, and then you go out there and you do it too. Bars. What's going on, man? Who in the chat? Oh, before I holler at who in the chat, man, I didn't even drink my soda. I just got finished eating. I made me a grilled cheese sandwich in the air fryer, and then I ate some rice and chili, some chili that Clandra made the other night. Charlie, when I tell you it was swinging. Y'all excuse me. I just finished eating and I ain't ate nothing. I mean, I ain't drank nothing. Hey, let me share my screen real quick. For anybody who don't know, oh yeah, I want to show y'all this right here. Remember the other day when I was talking about, I saw Dustin talking about the risk to reward. He touched on it again today, and you know what I'm saying, I was gonna play the little thing that he said today. I thought it was a cool it ain't nothing fancy. It's just, you know what I'm saying, he's stats driven. I was gonna play that, but if you go to my YouTube channel, let me go to get a video. All right, you see these videos right here? Those right there are the ICT videos. Let's go to the one that we in right now. That ain't what I want to do. Oh, I just saw it. That's what I want to do over here. That right there. Okay, if you go down to the description, there's a link in the description below. It says, watch the new ICT Concepts Explained Lingo playlist. Now, this is not me trying to, you know what I'm saying, hey, y'all, let's get them likes up too. This is not me trying to get any kind of clout, off of ICT. This is just me trying to explain the stuff that I do on a daily basis in small bite-sized chunks. I realize me getting on live for an hour and a half, that's a lot for people to go back through and try to look at, to try to find the gems, right? If you wasn't on the live, you don't know what's in the live. If you was on the live, you can't remember when I said what I said, right? So this playlist, if you click on the playlist, y'all, you hit it. This right here is the lingo playlist. It's 8 videos. An overview, I explain what we're doing and give you the definition of certain terms that we're going to be using throughout everything. Then the other 7 videos, they're explaining what each one of these PD arrays are. Mitigation block breaker. You can see the names of them, right? They're separate videos, right? So then this is the lingo playlist. The next playlist is going to be the price action playlist, right? It's going to be broke down the same way. And then the third section is going to be the strategist playlist. It's going to be broke down the same way, where it's only, so if you want to be a fair value gap trader, you come to the lingo playlist and you figure out what a fair value gap is, right? You go to the price action playlist and you find the fair value gap video and you watch how to find fair value gaps in price action, up, down, all of that right there, right? Then you go to the strategist playlist and you look for the fair value gap video and you figure out how to trade fair value gaps with different strategies. It's all broke down in nice, small, bite-sized chunks, and it ain't nothing but just this information. It ain't none of me babbling. It ain't me going back and forth with Robinson in the chat. It ain't me. It's just straight. This is what I do every day, and this is why I do it, right? And I'm doing it like that so that cousins like yourself will have a free resource that's clear, concise, organized, whatever you want to call it. And then you can look at all of them. If you want to know how to trade every last one of them, you can look at all of them on every playlist and trade to your heart's content. But I want to break it down so it can be more focused and you know where to go get the information instead of saying, man, what day was that when Tim talked about that? What day that was? Where what? Hey, it's an hour-long video. Did he say it at 30 minutes? Did he say it at 55 minutes? It's all, oh yeah. And when you go into the videos, if you look at one of the videos, you go into the description, each one of them got a link right here that says download the slides, right? Download the slides, and then you click on it, it take you to a Google Drive folder, and you can download the slides for the free 99. Everything for the free. The slides free, the videos free. Only thing I ask you to do is hit the like button when you watch the videos. That's it. That's all I ask you to do. Now, let's go see who in the chat. Let's go see in the chat. Here to learn and share. What's going on? What's going on? What's going on? Somebody tell me what's going on. I know y'all like my melodious voice. What's up, Hatter? What's going on, SJ? Hey, y'all. Angela, what's happening? Wait a minute. Don't see Valdez. What's going on, Angela? What's going on, Kim? What's going on, KC? Where's the rest of the Sunshine Band? I'm your boogie man. That's what I am. What's going on, Robinson? SJ, what's say? I better get it together because I'm almost breaking down and getting ready to purchase a class from someone. I don't want no. Do not purchase a class. Everything you need is right here on YouTube University for free. I'm breaking down the information. ICT got everything. He put his whole mentorship on YouTube. It's a whole lot to take in. I still ain't finished with all the mentorship videos, but I'm breaking down everything that I do every single day in these videos. Do not spend no money on nobody. I done spent money on courses before. I done paid anywhere from 500, 200, 4,500, 600. I done paid money, 4,500 for courses. You don't need to buy a course. Everything you need to do to trade is right here every day. Pull up every single day and ask as many questions as you want to, and we'll talk it out. I will be opening up the one-on-ones again, but I don't want to do that because the one-on-ones going to cost money. If you want to learn it, if you want to know it, pull up every day and ask as many questions as you want to. Right here on Al Gore's Internet. Long as I'm on live, I answer any question that I can answer for the free 99. If you want to get me another time when I'm not on live, it's going to cost you. And I don't want to charge nobody. I want you to get all the information for free. That's what I want. You're welcome. Yes, hang in there. Can't stay tonight, but I don't nobody I care. Get gone. I appreciate you for pulling up, though. I appreciate you for pulling up, Robinson. That's a good dude right there. That's a good dude. Oh, Robinson. What's up, Pamela? What's going on with you? Laverne. Good evening, Laverne. What's up, FC? I know I'm just getting overwhelmed looking at all the information. Hey, look here. Don't put your mouth up to the fire hydrant and then turn it on. Don't do that. Don't do that. Don't do that. It's a lot of information. Like I say, ICT got the whole mentorship up. It's a lot of information, right? When you're looking at anything that's got a lot of moving parts, right? You got to realize, but we gonna get to the price action. I don't care. You got to realize where you at in the scheme of things, right? Okay, I'm here. We got a lot going on here, a lot going on there, a lot going on there, a lot going on there. I need to focus right here. This is what we're trying to do. This is the commander's intent. We got to take this hill. You know what I'm saying? It don't matter what's going on over here with Bravo Company. It don't matter what's going on over here with Echo Company. I'm just worried about Delta Company. You know what I'm saying? We got to take this hill. You know what I'm saying? Ooh, that look nice. Don't look at that shiny object. Ooh, that look nice. Don't look at that shiny object. You know what I'm saying? You find what worked for you, right? This right here is working for me, right? You already done back test this. You already confident in this. So you start executing, right? If it don't work that time, don't start looking over here. Stay over that shiny object. You know what I'm saying? I already back tested. I know it'll work. You know what I'm saying? Boom, you try it again. It don't work. Don't look over there. Go back and look, journal your trades. Figure out okay, I see what I did wrong. I went in a little bit too early. I bought when I was in a premium market when I should have been selling. I saw the fair value gap. You know what I'm saying? And I bought it. I saw the fair value gap. It broke structure to the upside. Then it came back down to a fair value gap. And I bought, but I didn't realize I was buying in the premium. That's why my model didn't work that time. Don't abandon the model. Don't start looking over here to the left and the right. You know what I'm saying? Go back and analyze your trade and be like, yeah, that's what I did wrong. Then you execute your thing. Boom, it worked. You're like, oh man, I knew it worked. And then you go back and you look at, okay, yeah. I did my fair value gap. I bought when I was in the discount and it worked for me. You know what I'm saying? Then you do it again. Boom. I bought. I got greedy. I didn't take my profit. I tried to let it go further than my low-hanging fruit. I wanted to go for the gusto. So it stopped. That's what I did wrong that time. Focus on your thing. Stick to your thing. It's a whole lot out there that'll get you all mixed up. Find what worked for you. Stick to your particular thing. That's why I'm breaking it down into nice little chunks where you can be like, I want to be a fair value gap trader. That's what ICT taught on the 2022 mentorship. He taught fair value gap trading, right? Let me go over there and look at the fair value gap video, find out what it is. Let me go to the price action video, look at the fair value gap video, find out what it is. Let me go look at the strategy video, look at the fair value gap strategy video, and then I'm just going to implement this. I'm just going to focus on fair value gaps. I ain't worrying about breakers. I ain't worrying about mitigation blocks. I ain't worrying about this. I ain't worried about that. You know what I'm saying? And you can go back and look at the ICT video when he talking about, you know what I'm saying, the 2022 mentorship, because he ain't doing it but teaching you how to do one setup using fair value gaps. That's it. Breaking market structure, retrace back to the fair value gap. That's the whole ICT 2022 mentorship in one sentence, right? But then you got to realize when you're using that model, and the reason why I know it, because it's my own model that I put together myself from looking at all his old videos before he dropped the 2022 mentorship. Because when he dropped it, I'm like, man, that's my setup that I trade. It was way before. That's back when everybody was trading OTE. When he put out the OTE model a long time ago, everybody was on OTE. Go back and ask anybody what they was trading in 2021. OTE. What else trading in like 2020, 2021? OTE. Oh, you got to get that OTE. Got to get that OTE, baby. But it ain't nothing but a fair value gap, breaking market structure, retrace back to the fair value gap. But the one key to it is you got to realize, am I in the premium or the discount? If I'm in the discount, I want to be looking for reasons to buy. If I'm in the premium, I want to be looking for reasons to sell. I don't care what the overall narrative is on the day. It can be a bearish day, but if I'm in the discount of the day, I can take that model and go long. You know what I'm saying? Because if I'm in the discount, because it's for quick entries in and out. It's for quick day trading. You can use it for swing trading, but it's for day trading entries. If you're in the premium, you look for reasons to go short. Now, if you're going short while the market going short, you got a chance to run a whole lot farther. You know what I'm saying? But you can also counter trade with it on a quick day trading scalp. Man, hey, just stick at it, SJ. You hear me? What's going on? Cool it now. Hey, watch out. What's going on, Valdez? I paid for Terry's course too. I speak no ill will of anybody's course. I just say I have paid for courses and you do not have to do so. And with that being said, ladies and gentlemen, I'd like for y'all to say hello to District Attorney Angela Valdez. Buenos tardes, Valdez. What's up, Audrey? I've been missing for a few weeks. I'm glad I pulled up tonight. Hashtag focus. You hear me? You feel me? Pull up whenever you want to, people. Renville. That's my first time ever seeing that name. If this your first time pulling up, welcome. If it ain't your first time pulling up, I truly jollipies. But I don't remember seeing that name before, Renville. Appreciate you for pulling up. Hit the like button. Michelle Tucker. What's going on, Michelle Tucker? That's the last name I see in the chat, so that's the last name I'm going to shout out. Hey, let's get to it, man. Oh, yeah. Before we get to it, I said I want to let y'all hear what Dustin was saying about this. When I was talking about the risk to reward, remember, I was like, I saw Dustin talk about risk to reward on a video the other day, and then I was like sharing my input on it about risk to reward with y'all. Well, he came back today on his live from today. You can see this is the video. It says streamed 33 minutes ago, but that's back when I paused it. I paused the video because I had to go do some stuff, but it's from today, right? And he kind of touched on it. Oh, let me like his video. I ain't liked it. He touched on it. Was talking about the same thing. So I paused it there so I can share it with y'all. It ain't nothing super fancy or extravagant. Y'all know I got to change the screen so that y'all can hear it. Share Chrome tab. Dustin. Yes. Share. Boop. If y'all can hear it when I hit play, somebody put a 1 in the chat for me, please.
Yeah, like to comment on it anyways. Small caps giving you that nice pullback there. Same thing. The risk to reward is wider on this one, meaning there is still plenty of reward to be had relative to the risk that you have to take. So no problems there of the large cap stocks in the NASDAQ, right? So every position. Make sense? Meaning, and there's studies on this. There's a really popular one. If we look at the NASDAQ here, be saying is, all right, it's clear as day. You can define your odds of a rally here through the rest of the year. The market will go up or slightly, just give you a little bit more here. Then, even if that's not the best place, then we find out it goes a little lower. You could justify that purchase price. You can't justify Monday's purchase price. You can't justify Tuesday's purchase price. Nobody that bought on those days with any signaling and working its way to a point risk to made them 2%, just like that. On the deposit, of course, not to make it seem like it was something bigger. Anyways, I love that. Risk to reward. That's the week's lesson, right? This client felt that the risk was he was going to miss out. I need to get that money in. The reward was very limited. So we explained that to him and kind of talked about that. Now, you know this. You've been watching the show here. So you know from earlier this week, we said the risk to reward is skewed. It's no bueno, right? It's not going to work for you. It doesn't make sense. It's not a financially smart time to put chunks of money into the market, at least in the very, very, very short term. Over the long run, it won't matter, but we all want to get as much as we can out of our dollars there. The S&P is now getting and working its way to a point where the reward expands, right? The reward expands, the risk shrinks, and now we have more of equilibrium there where it may be worth it, or we're getting to that point. So if you are in one of those positions, you want the market to continue just ever so slightly, just give you a little bit more here. Then, even if that's not the best place, then we find out it goes a little lower. you could justify that purchase price. You can't justify Monday's purchase price. You can't justify Tuesday's purchase price. Nobody that bought on those days with any significant amount of money can justify that. It was very, very tough there. Also, I'll mention that the put call ratio, extremely extended, the most extended that it's been since 1990. Historically, when the put call ratio gets extended, that's the number of people participating in the options market to one side or the other. You can flip it. You can look at the call put ratio, put call ratio, however you want to do it. I'm talking options here. But the put call ratio is so skewed to the upside, or to the bullish side, I should say, right? People believing the market will go up or sideways is basically the positions that they're taking. So historically, when the put call ratio gets extended, that's meant more upside for the market. So if we get a pullback in the short term and we have now, little things lining up saying that this could make sense to get a little bit of a rally here through the rest of the year, okay, we just want to have a good entry price. That's all we want to do there. Remember, the options market is a stats-driven market. You can get emotional as you like, but the stats are what they are. It's the only market where, and futures options, stock options, things like that. It's the only market where you can define your odds, your risk, right? So you define your odds right away. They're just told to you. So you know what risk you're taking for the reward you're possibly going to be getting there. Anyways, let's go on over to the S&P here. I don't want to ramble on you guys today. I know I do that a lot. But the S&P, we have a clear downtrend. All right, it's clear as day. All year long, we've had this downtrend. It remains to be seen whether we're going to be able to break above it. What would help that is if we got a simple, calm, and clean pullback that people could justify putting money in. Because now what you'd be saying is, I'd like to buy somewhere in this area here. Okay, fine. I'm taking the risk that not only will we go up to the downtrend, but now we'll break the downtrend and maybe we could get something going up to here. I don't know. That may be a big ask, but you now have that option. So you want to bet on the downtrend breaking, you want to bet on the pullback first, right? Pretty cool. If we look at the NASDAQ here, there you go. Squeaks up back towards positive after hours, just ever so slightly.
Pretty cool. Yep. Just want to share that with y'all real quick. Dustin all about the stats. He always be about the stats, talk about how the options market is a stat-driven market. Talk about the same thing we be talking about. It's in a downtrend. If y'all notice, he was pointing. You see how he was pointing at that fair value gap in that breaker. I mean that order block at the bottom when he was like, I want to buy in down here somewhere, even if it go a little lower, that's still a better price. You still notice how he was pointing right there where a fair value gap was and where order block was, because it's like, that's why I be saying, man, everybody be looking at the same thing. You just don't have the clear understanding of what's making this work and what's making that work, right? That's why I say focus on whatever working for you, know it inside and out, take diligent notes so you'll know I did this, and this, and this, right? And when this happened, it didn't work. Oh, it didn't work because I might have skipped that step. Or it didn't work because it just wasn't my trade. Or it didn't work because I skipped. But you can go back and make an educated, analysis of why the trade went against you or why the trade went for you. If you just put on a blindfold, pulling out your 6-shooter and trying to hit the target, that ain't no good, man. That ain't no good. No, he doesn't. Max Payne for OPEX. Nah, he don't. It's another dude that talk about Max Payne a lot. I used to watch his videos quite a bit. Let me see if I can find his page real quick. He always talking about Max Payne. He talk about Max Payne every single day. I never even knew what Max Payne was until I looked at one of his videos. But he be posting videos and he talk about like options, like looking at like the options chain, what they doing to the put calls, ratios, and all that. He talk about that every day. It's called let me see if I can find it. We gonna get to the price action. I don't care. I hear the rumbles in the background. Somebody probably already hit the dislike button already. This is you see what it say? Tim's dinner discussion. This is what we discussing. Hear me. Hey, for anybody They got an issue with how I run my lives. Somebody let them know what's right over here. That's the window over here by Spidey. It's a window over here. That window right. It don't. Yeah, it's not daytime for real, but it's daytime where I stay. That's a window. Y'all know it's over there. FX Evolution. I don't know if that's his name. Not True Trading Group. Stock. Is it Stocks Today? That's him right there. It's Stocks Today. That's him right there. Yes, this is it, right? Stocks Today. He be talking about Max Payne a lot, and he posts videos like almost every day. He posts videos like almost every day, but I haven't looked at his videos in a minute. It's been a minute since I watched his videos, but Stocks Today. That's him. And he be talking about Max like almost every. Oh, y'all can't even see the screen. Why y'all ain't tell me that? Right? Stocks Today. This is the guy right here. His little cover thing is like a green circle, turquoise, whatever, and it says Stocks Today. And this is his page right here. That's what it looked like right there. He got 11.4K subscribers at Stocks Today. But he posts videos every day talking about, you know what I'm saying, what the market gonna do, what he think the market gonna do, comparing it to like 2028 versus 2022, bull flex, watch this, OMG, at this. He, you know what I'm saying, he posts a whole lot of stuff like almost every day, right? And he always be talking about Max Payne. Appreciate that here to learn and share. Yes, it's the door. Appreciate that. But yeah, he talked about Max Payne a lot, right? Now, since we're on Al Gore's internet, let's go over here and holler at our friend that y'all let me leave this morning without hollering at. We wrote a song for y'all. Want to hear it? Here it go. Spot Lee, where you at, baby? Here I go. Hey, how you doing? I'm glad that you came through. Look at this daily calendar on Spalene. That is a big old green candle. That's a nice boulder. Who know what that come from? That's a nice boulder. I like that boulder. Who know what that comes? Y'all put it in the chat if you know what that come from. Okay, Spalene gapped down and then took off to the upside. Power 3 in its finest, right? We opened near the low, closed near the high. That's Power 3 in its finest, right? Open near the low, close near the high, right? Accumulation, distribution, manipulation, right? Accumulation, manipulation, distribution. I said it wrong, right? Power 3 at its finest, all right? So I haven't adjusted anything on Spalene, but as you see, we gapped down, we came down and kissed the top of this breaking structure right there. We did not hit this mitigation block. We did not hit this daily mitigation block. We came up, didn't break the low. So right there, we did not hit this daily mitigation block right here, right? If we stretch that out in time, we did not hit that daily mitigation block, and I do not have anything for mitigation block on here. So we're just going to go with a daily bullish breaker for right now. Just change the name. Right. So boom, we did not hit this daily mitigation block right here. Right. Okay. So we did not hit it. We came to the breaking structure. Right. We gapped down, kissed the breaking structure, took back off to the upside. Right. This right here, this is very healthy for price action because we did not leave a big gaping full gap. We came back up and we went back into the wick of this candle. So we do not have a full gap. Yes, we do have a volume imbalance right here, but we do not have a full gap. So that's very good for, that's very healthy for price action that we came down and pushed back up. Now, looking at this, this is really giving me the vibes of reacting off reacting off something on a higher time frame in the premium, coming down, reacting off something in a lower time frame in the discount, and then pushing back up. Now that we don't push back up, now this very well can slide down because we consolidated right around here for 1, 2, 3, 4 days. Well, we got there and then consolidated for 3 days, and then we broke out of that consolidation to the downside, right? Right? We broke out to the downside. So now, what do we have below us? Right? We still have this daily fair value gap. We're inside. We haven't made it to the mean threshold. The mean threshold of this daily fair value gap is roughly right there at 387. Let's just say 387, close enough for government work, right? That will put us into this mitigation block, right? Inside this mitigation block, the mean threshold of this mitigation block, let's just say 384, close enough for government work, right? The mean threshold of that mitigation block puts us where? Right here inside this full gap down, right? You know, the full gap down is like a major imbalance on the daily that we need to get to. So the market can very well push all the way down here and get all the way down to where this daily order block right here. Wow, that's the same area that I was just talking about when I was like, y'all notice when Dustin was pointing, he was like, I want to get in right here somewhere. And then even if that don't come out to be the lowest low, that's a good price to get in at. That's the same area. That's the fair value gap I was talking about. That's the full gap I was talking. That's in that same area. And then that's the order block I was talking about when I was like right down there by that order block. All of that right there. I just peeped all that from when he was like pointing at the screen, because it's like you train your eyes just to see it. You be like, you train, you be like, oh, I just saw, and all that. For anybody who don't know what I'm talking about, let me go back and show you one more time with my history. Let's go to my history. Right? Pull up old Dusty Dust. Dusty Dust. You gonna get an ad at me? I just was on your video now. Stop trying to get an ad at me now. Right there. ES. Boom. Uh-oh, went back too far. Right? ES. See right there. Fair value gap. Right there. Order block. Right there. Fair value gap, order block, and then there's a mitigation block right there. This high did not break that low. That's a mitigation block right there. So you got a mitigation block, an order block, and a fair value gap right there. You train your eyes how to see it. You train your eyes how to see it. Get out of there, Dustin. Okay. Now let's go over. I'm getting this off the screen. Don't want you to be there. Now let's go over here and look at the price action for the day. That's a quick look at Spyleen to see what she did today. Let's go look at the price action. Okay, these 60-minute candles, I've already come in and adjusted the PDAs and all of that. So everything has been adjusted to what I'm watching. Now, before I talk about what I'm watching, that's the overnight. We talked about that this morning. So we opened. Okay, I'm going to 15-minute candle so we can really see a little bit more of the detail. Okay, so we opened right here. This is the opening candle. This big green candle right here. This is the opening candle. So from the 3:30 candle all the way up into the 8:30 candle, all we did was fall down. Right, as we said today when we was talking about the overnight price action, right? So all we did was fall down, right? Once we fell down, right, we consolidated a little bit. Right around 10 o'clock, we pushed up, got a break in market structure to the upside right here, came back down, right? Came back down, did not take out the sell side, liquidity, then we took off. Right, came back up, got another break in market structure, pulled back to this fair value gap right here, right? Pulled back to this fair value gap right there, took off again, came up to this order block right here, right? Once we hit that order block right there, we sold back down, came back down to fill in this fair value gap that we had came back down the first time, came down, boop. Filled in that fair value gap, came back to the breaking structure, filled in the fair value gap, Boop, took off. And right there. There's the 2022 mentorship. You had 2 entries off of that right there. The 2022 mentorship right there. Got a break in market structure, fair value gap retrace. It's a big gap, so you're taking a big risk there, right? Breaking market structure, fair value gap retrace to the same fair value gap, right? That's the second visit to that fair value gap right there. Personally, I would have been leery of this one right here because this is the second time you visiting it. You know what I'm saying? The only thing that would have made me not so leery was looking at this big humongous order block right here, right? Why? Because this order block came down into this order block right here. So you came up, came into an order block, and then made a new order block. So next time it come back to it, you expect this order block to hold up because it traded into an order block. So you got an order block on an order block on an order block on an order block. Yeah. So you expect it to hold up. But as far as the fair value gap trade, I would have been a little leery about it because that was the second time it's going back to it. And it went all the way clean down to the bottom. Right. But that's the setup right there. And then after we hit that fair value gap and push back up, right here, we closed right there, just shy of getting back to the highs, right? Just shy of, whoa, look at this. I just looked over there at my other screen. Y'all can't see that screen, but let me show y'all where the market stopped at today. Then somebody who be pulling up, who be taking good notes, who be remembering the PDAs that I be talking about, I be keeping mental notes of, and I be like watching them and keeping on track, right? Can somebody now? I'm gonna paste it in. I'm gonna copy it and paste it in, but I'm gonna pull the chart over here to show y'all this the only thing that I have been watching on this chart over here. It's the only thing I've been watching on this chart. And y'all, can somebody put in the chat what PDA that we was respecting right around here? And it was something that we previously was talking about. And I said, I'm keeping my eyes on it. Number one, I'm gonna tell you what it's not. It's not the order block from the opposite side. That's a big clue right there. Somebody put in the chat what PDA was right around here in this area that I said I'm watching, right? Somebody put in the chat. Y'all type it slow. It don't take that long. It don't take that long. Somebody put in the chat what PDA was right. We was talking about it all week long. The break. No, it's not the breaker. It ain't the breaker. It was in the, I said it's not the order block, right? And it's not the order block was a clue because it was in the same area as the order block. The order block was on the sell side. The order block was on the sell side. And I said, I'm watching this area because the order block was there, right? But went to a whole other meeting. Nope, not the rejection block. Y'all just running down the list. Y'all ain't taking no notes. Y'all ain't listening. Y'all just running down the list of different PDAs, man. All right, time's up. I'm fun to give you the answer right now, right? Booyah. Who remember what this is right here? Let me put this on daily candles. Daily candles. This was the order block right here. The order block was there. It was right across from the order block. The price was sitting on top of it all week. And when we broke through it, price came back and did what? Y'all just running through names now. Y'all running through names now. It's the daily volume imbalance. Remember I said the volume imbalance, all the PDAs, they act as support and resistance, right? Especially the gaps, the full gaps, the volume imbalances, they act as support and resistance, right? And so all week, ever since Friday, we have been sitting on top of the volume imbalance, right? We've been sitting on top of it because on Thursday, when we got that big blast off, we came up and we stopped at the volume imbalance, right? I mean, we stopped at the order block. And then the next day, we made the volume imbalance. And after we made the volume imbalance, we sat on top of the volume imbalance every day. Monday, Tuesday, Wednesday. And then today, right, we went down below the volume imbalance. And when we came back up, we stopped. Hurt. We threw on brakes. Where my other chart at? Oh, that is my chart. Hurt. We threw on brakes. Right? Let me put it on. I can put it on 4-hour candles. It don't matter. You see these 4-hour candles right here? Right? These 4-hour candles here. We sat on top of the volume imbalance. And then today, right? Here we go. This is the first candle from today. Right here. That's the first candle from 4-hour candle from today. Right? Once we broke through it, we came down. Right? Stopped right here at this 4-hour fair value gap. I mean, we was talking about the 4-hour fair value gap this morning. Right? So we came up into a daily order block. We pushed up into a daily order block. Then we came down into a 4-hour fair value gap. Once we hit that 4-hour fair value gap, we turned back around and we stopped where? Right at the support. Hurt. Throw it on brakes. Can we bust through it? Yeah, we can bust through it. Right? Now that we've come up and we filled in this fair value gap, can we keep going? Sure. We hit this order block. Can we keep going? Sure. We don't know. We trade what we see. We wait for the market to tip its hand or tip its hat or whatever you want to do. And then we look for our entries. But I just thought that was very interesting how we use that volume imbalance as support on Monday, Tuesday. See right there. That's the Sunday gap down right there. That's the Sunday gap down right there. Right? So we use this area right here as support all week long. Right? Before the volume imbalance got made, that same area, if you look, I need some, let me put it back on dailies. Before that volume imbalance got made, right? Before we made the volume imbalance, if you look right here, we were using this order block right there. We were using the order block before the volume imbalance got made. Right there. Right? Well, Tim, how you know we was using the order block? Because I'm glad you asked that question, little Timmy Rogers. We are in a market maker buy model right now. When you have a market maker buy model or sell model, on the sell side of the buy model, when you set an order block, when you get back to that order block on the buy side, right? Once you trade through that order block, right? When you come back down to it, that order block will act as support. That may be an area to take along because it's going to act as support, right? Once we broke through that order block, right? We also had a volume imbalance right there. So we sat on top of the order block and the volume imbalance. If I blow it up, see that? Look at the bodies of the candles, right? That candle is on top of the volume imbalance. That candle sitting right on top of the order block. That candle is still above the volume imbalance. That candle is a little bit above the order block. And then we finally broke through it. Once we broke through it and we came back up today, let's put it back on 4-hour candles. All right. Once we traded through it, right, and came back up today, we kissed the volume imbalance and closed below the order block, right? Then once we kissed the volume balance, closed below the order block, we opened up here and filled all the way back down, right? Got back down to that fair value gap that we was talking about. Then we turned around, came all the way back up, hurt, and stopped right at that volume imbalance. Again, right back there at the resistance now. You know what I'm saying? And now in the after hours, we've opened up and we pushed up, came just a little short of filling in this 4-hour fair value gap right there so far, and we've pushed down a little bit. Will we keep sliding down? I don't know. I don't trade Sydney or the Asian, but I just thought that was very interesting when I saw where it stopped at. I said, look at that motor scooter. Look at that motor scooter. And thank you everybody that just was throwing everything at the dartboard, hoping something would stick. And that's it, man. That's all I got for the price action recap of the day. The price, all we did was sell down all night. Well, from London until just before New York opened, and then New York opened, we retraced back up to a PDA, came back down to a PDA, pushed back up to another PDA, and then now in the aftermarket, as you see, we've come back up right up here a little bit further into this 15-minute order block. And as you saw, we had pushed up into that 4-hour fair value gap. We still have not touched this 4-hour mitigation block right there. I would love to see us hit that 4-hour mitigation block before proceeding down. Tomorrow, Friday, you never know what Friday is going to give. You know what I'm saying? I'm hoping that Friday, you know what I'm saying, give us a chance to push down into some of this stuff down here. It could very well be a do nothing day, but I really hope it go ahead and give us a push down, you know what I'm saying, to get down into this gap work below. Let me show what I'm watching. I said I was going to talk about that. So looking at what I'm watching, this is our overall range. We still in the same overall range. We still have not hit the area that I'm watching for us to hit for this market maker buy model. We're getting closer and closer, right? On the 15th, we came really close to it, but we still have not got there yet. So y'all already know what I'm watching above price action, because we talked about that before. Below price action, I have changed it up just a little bit. Again, y'all know I adjusted the top and the bottom of the weekly box to last week's low, and equilibrium for that. I didn't adjust that this morning. I noticed that when I was getting ready to redo it, I still had the line way up here somewhere, but equilibrium for that is 38.94.75. Let's just say 38.95 is equilibrium for the weekly box, right? Equilibrium for today's box is right here at 39.51.50, right? Let's just say 39.52, close enough for government work. So the equilibrium for today is 39.52. Equilibrium for the weekly box, that's the weekly box, not the week, but the weekly box that we're looking at, is 38.95, right? And then above price action, immediately above price action, is that 4-hour mitigation block that I was saying I would love for us to hit. I would really like for us to hit that mitigation block before sliding back down, right? And I really think we're going to slide down. If we don't slide down tomorrow, I think we're going to slide down next week. And the reason why I think we're going to slide down is because y'all know how I feel. Whenever we have a long wick like that, we're going to revisit that wick and maybe even keep sliding lower, right? Especially since we set up a bearish week. You know what I'm saying? We made the high on Tuesday. We also made a low on Tuesday, but we made the high on Tuesday and start to sell off. So since we had this humongous bounce at the end of the day, we may dilly-dally tomorrow and do nothing, or we may continue to slide. Tomorrow is OPEX. I like to say OPEX because we got an OPEC meeting. And when I say OPEX, it sounds too close to that, and it stands for options expiration. So it makes more sense to say OPEX, in my opinion. So OPEX, right? And then we got a daily breaker right here that I'm watching. So when we came down to that 4-hour fair value gap and wick back up off of it, remember, we came up today. You see, we came up to this daily order block right here. For those that can't eyeball it right off the rip just yet, we had a daily order block right there. Boom, daily order block, right? So we went back up to the daily order block, right? Went pretty much to the mean threshold. Then we came back down and stopped at, it was a 4-hour fair value gap right up in here. I already deleted it off. It was there this morning. So based off our range that we was dealing with yesterday, this order block was in the premium. This 4-hour fair value gap was in a discount. So we went to a premium daily, came to a discount 4-hour, and then we bounced up off off of it. So based off of stuff I learned from ICT, whenever you go to a premium or a discount PDA, you're looking to deliver to a premium or discount PDA one level down. So if you go to a daily premium, you're looking to deliver to a 4-hour discount, and you know, so on and so on and so on. 4-hour premium, you're looking to deliver to an hourly discount. Hourly premium, you're looking to deliver to a 15-minute discount. Weekly premium, you're looking to deliver to a daily discount. You know what I'm saying? You're looking to deliver one level down. Now that we've delivered to that, we push back up, and we're in the premium on the day, right? This is the daily equilibrium. We're in the premium on the day. If you break down we're in, for the overall box, we're in a discount of the premium, right? We're in a discount of the premium. We're in the slight premium. We're in a premium, right? For the overall, we're in the discount of the premium. And if you let's break down the weekly box into quadrants and see where we at. So from the equilibrium of the weekly box to the high, right now we're in a discount of the premium on the weekly box, right? As you see from here, when we was trading the day, right? We was up in, well, no, this is our old range, but when our old range was around here, you can see that this order block right there was in a premium, right? It was in a premium from our old range that we was looking at before, right? So that sort of equilibrium was where, I can't undo, somewhere around here. Okay, so equilibrium of the premium will be right around this mitigation block, getting into that mitigation block. Does the market want to get there? I don't know. We'll see. What's going on? I'm clicking on stuff everywhere. Get out of there. We'll see what they want to do. So those the PDAs I'm watching. This daily breaker got a daily mitigation block inside that breaker. This is the daily fair value gap that we got inside of today. Right here. This is the daily fair. God dog, I hit the wrong thing. Rectangle. Oh, that's Control F12. That's why I know, because I got to hit too many buttons. That's the daily fair value gap that we got into. We didn't quite get down to the mean threshold of it because we stopped at this 4-hour fair value gap right there. But the reason why I didn't put the daily fair value gap right here is because I wanted to mark out this daily breaker. Since we had stopped right at that daily breaker, I wanted to mark out the daily breaker so I can quickly see where it is without looking back at the candles when I'm not on the daily chart. I want to know, okay, I'm inside that daily breaker, right? And then I got the daily mitigation block right there. And then there's some other 4-hour stuff that may be inside there, like this big 4-hour fair value gap that's go from the weekly equilibrium all the way down below the daily breaker. And then right there at this daily mitigation block, this is actually a 4-hour breaker right here. You got a 4-hour. Technically, this is a 4-hour breaker. Looking at it from this high to this low, it's a mitigation block. And I think I marked it as a mitigation block today. But when I really study it and look at it, right, price came up, paused, came up, paused here, right? Then it went up. So on this price leg right here, this is the low of this piece of that price leg. So if you go from this high, we broke this low right here, and then we took off. So that's actually a breaker and not a mitigation block. At first, I was looking at it from here down to this low. But once I really studied it, we broke this swing low right here. on this piece of the price leg from that down closed candle because we went up and we pulled back. You know what I'm saying? So that's actually a breaker, but that breaker is in the same spot as this daily mitigation block right there. So I just marked out the higher time frame, and all of this would be in this mitigation block, this low, and this 4-hour order block right here. It should be a daily. Is it a daily one there too? Yes, it's a big daily order block right there too, right next to this. So this daily order block, this daily mitigation block, right? All of that is in the discount of the overall price range, right? That would be a very nice place for the market to come down to bounce off of right there. That would be a beautiful place for the market to come to and bounce off of. But the only thing that I'm really watching is we got some really smooth equal lows right here. Right there. Those lows are smooth as a baby's bottom. Smooth as a baby bottom. You got 37.50 and 37.50. They are exactly the same. Smooth as a baby's bottom. That's the only thing that concerns me with price trying to get through this mitigation block and this order block, because we got them smooth equal lows, smooth and pretty. And then this order block right here, it's like we came down and we hit that order block, right? We came down and we hit that order block. So now we coming back down and we need to hit this order block, because this order block hit this order block, right? This order block hit this order block. This order block hit this order block. So now we just need to come back down and hit that one. If we got down to this order block here, that will be a beautiful place for the market to continue up to hit this high, right? But like I say, we got them smooth equal lows down there. That's the only thing I'm watching. I'm tired of running my mouth. What do you say? I sneak in last row tonight. What's up, Kareem? Didn't Wednesday daily candle hit a rejection block? Let's see. What was Wednesday? What was Wednesday's date? Wednesday was the 16th. No. Wednesday was the 16th. There's no rejection block over here on the daily. Wednesday was, oh, wait a minute, I'm looking at the wrong calendar. The 16th. The 16th. Yes. This is rejection block right here. Right there. That long candle right there. Long candle right there. That's your rejection block right there. We got up above that, then sold back down. Long candle right there. Yes, it did. And for me, with my rejection blocks, you can do it off of one candle, right? You can do it off one when it's really a really long candle. You can do it off one candle. But like for me, I like when it's like how this candle and that candle got like equal bodies, even though this candle is in the middle. I like for it to be two candles next, like these two candles right here. If these two candles had like long wicks on them, I'll be like, yeah, rejection block, because it's two equal body candles and I can just like point it out quick. Like, oh, boom, rejection block, right? When it's one candle, Lord, can't see the screen. Y'all ain't seen nothing I was talking about. I ain't going back through it. Y'all can't see nothing I was talking about. Yeah, but like I was saying, this long candle right here, that's the rejection block that it hit, because you can do it with one candle, but I don't like watching the rejection block as one candle, because in that case, every candle with a long wick would be like a rejection block, in my opinion, right? But when I see two candles, you know what I'm saying, right at a significant high with long wicks, oh, rejection block. It is stand out. Or at significant lows. You know what I'm saying? It automatically stand out like, ooh, rejection block. Ooh, rejection block. You know what I'm saying? Just like right here. See these smooth candles right here? Like smooth right there. Ooh, rejection block. You know what I'm saying? Because they like they right next to each other with long wicks sticking out the bottom, right? But like I say, when I was making the videos, the rejection block, that's one of the ones I rarely look for or rarely try to look for anything to trade off of. You know what I'm saying? But probably because I'm not a big turtle soup guy, but that's it. I appreciate everybody hollering scream. Y'all should have said it louder. Hey man, we've been on here for an hour. I think that's it. I think that's all I got. Do anybody got anything? I appreciate y'all for pulling up and hanging out with me. Y'all know what the lick read, man. Do not put off tomorrow what you can say today. Let the people know. Let the people you love know you love them today. Say it today. Ain't nobody promised tomorrow. If your parents here, call them up. Hey, mama. Hey, daddy. How you doing? I was thinking about you. I love you, baby. If you got grown kids like me, speaking of grown kids, my eldest daughter, Jada, she called me today. Let me, before I finish giving my spiel bill at the end, let me tell y'all the good one she came up with today. Johnny on the spot. I said, boy, if this ain't my baby little duck. If this ain't my baby little duck, Johnny on the spot with it. I said, hello. It was a I said, wait a minute. That's the city my kids live in. Let me answer this phone. It's the number. I don't know. It just got the name of the city. So I answer it. Hey, Pops. I said, what's going on? This is my new number. I said, okay. Nice of you to finally call me. I said, I text you on your birthday. Woke up middle of the night, taking a picture of the blood moon to send it to you on your birthday. Sent you the screenshot, the screen record of everybody in the Spider gang saying happy birthday. You just text me back. Thank you, Pops. I love you. Tell everybody in the gang I said thank you. But you never called. Oh, yeah, because I got a new phone on my birthday. So what, your phone wasn't working? No, I got a new phone. And I told them I wanted another number, but I didn't know they was going to turn my old number off. And so they had to order my phone. So I didn't have a phone from like my birthday up until now. I said, that's a good excuse you just came up with. I got to give it to you. That's a good excuse. You got a new phone. You switched the phone number and they had to order the phone. So you couldn't use your phone from your birthday up until now. Boy, you was Johnny on the spot with that one. You was Johnny on the spot with that one. But yeah, man, y'all let the people you know that let the people you love know you love them today. Ain't nobody promised tomorrow, man. Don't live with the regret of little Timmy Rogers of not going to see his daddy every single weekend and not having the opportunity to do so because he passed away. I went and hung out with my homeboy, my brother from another mother today. We sat down and had lunch together today. I had to go out there when I had to go pick up the note for Chris to take to his school. I said, what's up? What time you go to lunch? He was like, anytime, whenever. I said, tell me what you want? I'm gonna pull up on you. Got him one of the more impossible burgers from Burger King and a sweet tea. I won't do that no more because that meal costs like $11. I grabbed me a classic chicken sandwich meal. We sat down, chopped it up, ate the food, chopped it up, man. Two grown men just hanging out, talking to each other, relaxing, chilling. Ain't talking about no foolishness. Talk about our families, talking about our wives, our kids. You know what I'm saying? Our grown kids, our teenagers, just chopping it up like brothers do. Leaving each other. Love you, man. Love you, man. You know what I'm saying? We got to learn how to tell each other we love each other. Man, if you love your homeboys, tell them, man. You know what I'm saying? Start acting all hard, man. Tell your homeboy you love him, man. Hey, I appreciate y'all for hanging out with me, man. Y'all know I get to run my mind if I can't help it. I see y'all in the morning for the overnight price. Actually, on. Till then, man, y'all enjoy the rest of y'all night. Enjoy your family, man. I see y'all in the morning at 9 a.m. Eastern Standard Time right here. Gone, man.